In this video, I'm going to be showing you how I made just over $2,000 in 1 week day trading the Forex market. I'm going to share with you every trade that I took this week and an insight into my simple day trading approach. But first, let's share a life update. If you're new to my channel, welcome. My name is Emily and on Mindfully Trading, I share my journey as I grow and develop as a Forex trader, as well as some tips that I discover along the way. And if you are one of my subscribers, then hi and welcome back to my channel. You may have noticed that I have a little helper with me today. My second born son, Theo, who is just over 2 months old now. He wouldn't settle downstairs, so I thought he could join me on this little video today. But he's fast asleep, so I'm not going to disturb him, and we'll see how we get on. If you're a fellow parent watching the video, then you'll understand the joys of having your own personal hot water bottle whilst you are at the computer working. But as always, it's been fun and games, balancing day trading Forex full-time as well as being a full-time mother to 2 children under the age of 2. Sleep is very much up and down. It has been a struggle, but last night it was good. I managed to get a lot of sleep, really, considering, so I'm grateful to that. But for me, I feel like the trick is to just try to find peace whenever I can trade, and that's it. It's all about acceptance, accepting what I can get and trying not to get frustrated at what I don't, what I miss, because I don't want to add to any of those crucial trading psychology emotions that we all go through. So for example, my trades this week were mainly taken on Monday, Tuesday, because that was when I had the opportunity to trade. I didn't even look at the charts on Wednesday because I was just really busy. I had a lot of plans with my boys, so that was a non-trade day for me. Thursday I was looking at the charts, but the charts just didn't align for me, so I didn't have a trade. And here I am today, Friday, the 24th of November, sharing this week with you guys. So all of the resources, all of the software that I have used, that I continue to use for trading, are linked in the description below if you want to check those out. Remember to like and subscribe to the channel, and let's jump onto the screens. So I've just loaded up my broker here in MetaTrader 5. So this is the trading account that I have with the prop firm, the 5%ers. I do talk about them a lot because they are the prop firm I've been using for over a year now. But if you want some more information, I'll link to a video above, and I have got a link in the description below to the 5%ers. But they're basically a prop firm where I trade their company capital and we take a split of any profits that are made. And these are the trades I took this week. This is, just to point out as well, you may notice it says demo account up here. This is the challenge that I'm going through for one of their top accounts, the $100,000 account challenge. I'm currently going through it. I'm taking my time because there's no time limit, and at the moment I think I'm doing well to be doing this at all with having 2 children. So this is just my approach to trading this account, day trading Forex. But I've been focusing predominantly on pound dollar, and as you can see, these are all the trades I took this week. Now, it's actually been a really good week for me, but that is with a lot of hard work and a lot of focus. It's not been easy. I have worked hard to get these winners mentally because I've been going through a red streak. So this week, my focus has been on managing risk and trying to just get some wins in my account, and that's exactly what I've done. So it's really good to see that if you really focus, really dedicate, you can achieve what you want when it comes to trading. So we'll go through each of these trades individually. So I took 3 trades on the Monday. One was in the morning, and then I took one in the evening. I actually took 2 positions on this. One was held for a larger target, which I managed to gain. And I took a couple of trades on the Tuesday, and it just resulted in a nice win for me. So I risk 0.5% per trade. I've lowered my risk for the moment, and risking 1 R, I've actually managed to get 4.5 R, which equates to just over 2% on my account, which is a really nice win for a week. So let's go through each of these trades. So my strategy that I use for day trading combines quite a few different factors, including news and events releases, a technical analysis, and also timing. So I usually time my trades to the New York session, which for me is about 1:30 in the afternoon GMT. And this first trade here I took on Monday afternoon. So we're on the 5-minute time frame. I used the 1 minute to really time my entry, but I basically just took a short win here just to get that nice base hit win on my account on the Monday to just create a profit cushion. Obviously, looking at the chart like this, you could see that if I had held any of that or left it longer, you know, I could have gained more, but I wasn't taking that trade to try to just aim really high. I was taking it to just get a win to start me off, and that's what I did, which is great. And then I continued to sort of watch this in the background as the pair continued to trend higher on the Monday morning. And so in the evening, as I was doing the bedtime routine, I got the boys to bed and I had a bit of time to jump onto the charts. And I had a look and set this trade. So let's have a look at trade number 2 in more detail on Tradingview. To really share my thought process on why I took this trade, it's crucial to start off on the daily time frame. That is the highest authority time frame for day trading. In my opinion, it is the time frame that a lot of banks, a lot of corporations use. You can get some really important key levels from the daily time frame. And so I gained my directional bias from this time frame. And looking at this here, I've gone back in time to Friday's close. So this is what I was looking at on Monday. And this is a beautiful pattern. Let's zoom in on this. As you can see, on the daily, we have been pushing up. We've made a high here, we've pulled back, we broke this high, we pushed up with this nice big bullish candle to make a new high, and price has been pulling back. This pullback is very interesting because whilst we are in the phase of pullback, I typically don't really trade or don't push it because obviously we're pulling back. We've come down here, price didn't break this high, it broke the low, we continued to pull back down. But on the Friday, this is the interesting candle because pushed up, it broke and closed above the previous candle's high. That's the important detail because that shows the price is breaking out. And we even have this long bottom wick here which rejects the lows. So it's really nice because price is pushing up, which indicates there's a high probability that it will continue pushing up. And so I was looking for longs. So how does that look on the 4-hourly time frame, the next time frame I use as part of top-down analysis approach? Well, this is that large push, this is the pullback we had, and as you can see, we start to get more candlesticks because we're on a faster time frame, and from those they can create interesting looking patterns. And here is a nice pattern, a confirmation pattern. From the high here, we've come down, we've pushed up with momentum, we've come back down, we've got this large wick rejection here, and we've pushed back up. Now I can see quite a lot of detail here. What can you see? First of all, we've got this double bottom pattern. Fair enough, it's not a perfect letter like this. It's not perfectly aligned, but it is a double bottom pattern. That's the first thing I notice. The second thing I notice is the double bottom pattern is situated at this key level, 1.24. It's an institutional price level at the whole dollar, and that just adds another area of confidence to this. Together with the fact we've got this candlestick pattern here, this very large lower wick, this is a bearish pin bar, it's rejecting the lows, it's rejecting this institutional price level, and then we're starting to curve back up. Sorry guys, I just realised I didn't even have my mic in place. That's where my head's at this morning. I've just put the mic back. Sorry if the audio to begin with is a little bit echoey. Hopefully it'll be a bit better now. But let's have a look back at the chart. So looking at the 4-hourly, as I said before, these are all really nice combinations of technical analysis factors that help to add confluence for a trade decision for a long. Let's jump to the 15-minute time frame. And this is generally what I do for trading. I start at the daily, I drop to the 4-hourly, I drop to the 15 minutes. Sometimes I trade from the 15 minutes, sometimes I drop to an even faster time frame like the 5 minutes. It just so depends on each individual trade, but I do pretty much follow the same pattern. So when I go onto a faster time frame like the 15 minutes, I generally just look at the current daily's candlesticks. So this vertical dotted line here just marks the start of the Monday session, and this is what price did on the Monday. So for the most part, we opened here, we had a little drop down, again coinciding with this institutional price level, and then we pushed higher. So we're swinging higher. We've had a pullback down here, we came up. We rejected this institutional price level with a big bearish candle just at the London session, and we came down and broke the low of this candle. That's why I took a smaller position for trade number 1, because we did get a double bottom pattern forming here, and I was long biased from the daily, so I decided to go long. But I was unsure because we had such a rejection at whether price would actually break and sustain this level. But as I watched this throughout the afternoon on the Monday after I got out of trade number 1, before I got into trade number 2, I watched price push higher. The daily candlesticks were still very bullish, and although on the intraday time frame there were some signs here of potential reversal, this is where the daily time frame for me is the authority, because I know that it's a very strong breakout on the daily from that pullback. And generally from my experience, in combination with those daily factors, if price continues to kind of creep up like this, a reversal is less likely. And in fact, there'll be traders who've jumped on this for a reversal and probably got burnt by the fact that we broke this. As you can see here, it pushed above these two mirror bars, and that was when I realized that price is definitely going to continue up. So this was in the evening, Monday evening. I was doing the bedtime and the bath time routine. Now that can be crazier than trading, believe me. But once I managed to get the boys to bed around about 7, and I looked at the charts and I looked at this, the fact that we'd broken this, we'd closed above it here with momentum. We were now above this institutional price level, which is an extra bit of support for a long. All of these factors for me confirmed my entry, which I set just above that institutional price level here at 03. And why did I set it there? Well, I also used the Fibonacci retracement from this previous low using the bodies and applied it to the high here. And this gives 3 areas of optimum trade entry. Now, usually I use the very top of those, the 62% retracement level at 0.5. But for this, because I wanted to get my entry closest to institutional price level so that I could have a nice larger stop. And also because of the time of day, this was an evening trade. I knew that it was going to be held overnight, and I wanted to account for the slippage that might come from the larger spreads and obviously the Asian session. So I set my order a little bit lower, 03, and I used a 15 pip stop, which was far below the institutional price level, the low of this little recent price swing here. I felt like that was a wide enough stop to use. And initially I set 2 trades. So the first one I set was for a 1-to-1 profit loss ratio. I know that's not a positive profit loss ratio, but as I said before this week, my focus was on managing risk and getting some base hit winners. So I set trade number 1 as part of this trade for a 1-to-1, so just bank the profits. And then I also set another position, the same entry. In fact, I think there may have been a little bit of slippage. I think I got into this a little bit lower down. But it was the same principles. I had an entry there, I had a stop 15 pips, and I used a larger target. So I used a 1.5R target for this. I actually set it a bit higher, I always do, just to account for the commissions. Now in hindsight, looking at this together with the daily time frame and all the other factors, I probably could have aimed for the next institutional price level, set a much larger target, but I didn't do that at the time. I set a 1.5R target. So this is the trade plan I set, and I basically set that and went to bed. So when I woke up the next morning, this is what happened. So as you can see, the entry was very nice. I was barely in drawdown. It got triggered around about 10 o'clock, 10:15 in the evening. And my first trade hit its take profit at about 1 o'clock in the morning. Trade number 2 followed at about 2 o'clock in the morning and hit that nice 1.5R target. So when I woke up, it was one of those beautiful mornings where you wake up, eventually check your phone and see that you made a nice winning trade overnight whilst you were asleep. Love it when that happens. Just releasing the rest of the candlesticks there, you can see that it did continue on up to around about 2.5. We had a pullback just before the London session, but then pound dollar continued to trend upwards during London, and eventually it did hit that institutional price level. So if I had extended my first target to the institutional price level, 3R, which would have basically doubled that win, it would have succeeded at around about 10:30 the following morning. Again, there's always a lesson from trading. Whether you take a loser, whether you take a winner, there's always something to learn. For me, I'm obviously using 2 different targets here, and the lesson is probably on the second target to just try to make a bit more money. And just hopping back onto my broker, so that was the Monday. So I had the first trade in the morning, the 2 trades I just shared with you, and the second one hit the following day, so that's why it's dated the 21st. And then I had another 2 trades that I set on the Tuesday, the 21st. Now I'll just show you a screenshot of this. I always screenshot my trades afterwards because I can make my notes and do my reviewing from that. Still fast asleep. The life of a baby. So following on from the analysis that we just went through, my winning trade. Remember I said that we had pushed up to 2.5R, we pulled back a little bit, and in London we trended higher. This looks a little bit differently because I'm on the 5-minute time frame, and we just went through it on the 15-minute time frame. So there are more candlesticks here. But this is the same price movement that we were just looking at, and price did push up to that institutional price level. So when it came to the New York session, you may be wondering why I went short when my daily bias was long, and there are a couple of reasons for that. Price had already broken the previous daily high, it had already come to this institutional price level. We'd had already got this push up. Now we come down, and just before New York, we pushed back up to this level. We broke it, but then we got this large bearish candlestick down. Now this can be a reversal pattern. It's at an institutional price level, and from that, I was in combination with the larger time frames, I thought that it was very likely that price needed to pull back. We can't always keep pushing when we're in a push phase. It's going to eventually need to pull back. And so I was watching this. I'd plotted these levels here, which are from the larger time frame. They're areas that price may pull back to. And I thought that there was scope for price to pull back to these levels during New York. And that's why I set these shorts. Now I set two positions. Again, one was looking for a 1-to-1 profit loss, which is what I got. But I made a mistake with my second trade. I was aiming for a larger target. I was aiming for 2 times. That was the right thing to do. But where it went wrong was after I got my profit from the first trade, I set my second trade to break even. And unfortunately, as you can see, after price pushed down to the target on my first trade, trade number 2, it came up and it tapped me out break even. But the stop would have held and it would have eventually dropped. And it would have given me an extra 2R profit. So I could have got an extra $1,000 or 1% on this trade. But I missed out on that because I went to break even. Why did I go to break even? Well, I was focused on managing my risk. And although I did think that this trade was a sound trade, it was short and my overall long-term bias was long. So I was just being overly cautious there to not allow it to turn against me. But it's what happens. It's very rare that you can just get exactly what you want all the time when you are trading. You have to basically work really hard and learn from it, always learn, and just keep moving forwards. So back on Tradingview here, continuing on looking at pound dollar on the 50-minute time frame. This was the area where I took that short I just showed to you. It was around about here. And at the time, obviously, I made the profit there. It was a very short trading opportunity. Now, as you can see, it continued on Tuesday evening and then Wednesday morning. Although we had a retest of the institutional price level, price did eventually pull back and it came back down to this level here. Now, Wednesday, I missed all of this. I didn't trade at all. I didn't look at the charts Wednesday. We had another retap of this level. Would have been another opportunity to get short and then another really large drop down. So we did get that pullback that I was kind of expecting. In fact, there probably would have been a really beautiful trading opportunity in there, following on from my trade idea from the Tuesday. But again, I missed it. I wasn't on the charts Wednesday. So let's move forwards to Thursday. And this was what we were looking at on Thursday. So Thursday morning during Asian, we grinded higher, and in London, we had a double bottom. Now, I actually had an order set literally just at this institutional price level. And as you can see, price came down. It was a few pips from triggering my order long. It was something like this. I had a 15 pip stop just below this consolidation. And I was actually aiming for the institutional price level. So it would have been a really nice win, but I didn't get triggered. So I technically traded on Thursday, but I didn't get into any trades because it went without me. And that happens again with trading. And you have to navigate these frustrations because sometimes you just miss an opportunity. That's what happened to me on Thursday. And since then, I haven't actually seen another trading opportunity because we've reached this level. And I don't think it's very clear what price wants to do. I think it wants to carry on going long based on the larger time frames, but I think it's starting to get exhausted. So as you can see, I had this plan set from yesterday at 05. I'm just going to move that along. I'm not in that trade. I don't have any trades set, but I've got an alert here, and this is just something I'm watching. I don't think it's probably going to come down to this today. I haven't updated this based on today's trading performance, but I'm going to just keep an eye on this and see how price unfolds. Once again, these trades are taken using my simple day trading approach. I'm trading one pair, pound dollar. I've tried multiple times to add to that, and every time I do, I always seem to have the same experience. I may make profit to begin with, but eventually it just causes more stress and losses than I think it's worth. So I'm really trying to just dedicate to one pair again. For you subscribers who comment and say stick to one, you're right, I'm trying my best. And the other factors of this simple day trading approach is focusing on the daily time frame for setting key levels, for looking at institutional price levels, and then using a faster time frame together with Fibonacci retracement to set entries, focusing on managing risk using a hard stop loss, not risking more than 1% per trade. These are all parts of my trade plan. If you don't have a trade plan, you must make one. It's crucial for your success as a trader. If you're really new to trading, if you don't know what I'm talking about when I'm talking about a trade plan, I have got a free plan that you can download. I've got a link in the description below. And I also talk about it in my upcoming ebook. It's due to come out soon. It's just being finalized. If you want to join the waiting list, do drop me an email and I'll include it on the screen here and I can add you to the waiting list. I've had a lot of people asking to be added and I may not have had time to get back to you. So just know that I have received your inquiry. Thank you. And I will get back to you soon. Meanwhile, if you've enjoyed the video, please let me know by hitting that like button. I hope you've enjoyed it and subscribe to the channel for more content. I'll catch you in my next video. Thanks for watching. Bye.